Hello traders, this is the quick breakdown for gold which we have been trading this week, and I did say I was going to do a quick follow-up video. It's important because I've been stalking the price on this move up for a few days and just had to be really patient with it before actually shorting it. So we had some news that helped provide the kicker, if you like, the volume, the start the fire, get the movement. We had this move that sort of came up to around the 618 of the last range. So when we zoom out, this is a 4-hour chart, and you can see that we were sort of sitting at about that 618 roughly, just maybe slightly above, just tinkering on it. But said obviously I didn't want to short it there. I wanted to see if it could just finish off this move. So indeed it did stall and consolidate, sucked in a bit more liquidity, and obviously for those who are a little bit less patient or necessarily impatient, but those that see an opportunity to maybe short with stops just above, you could understand the setup is there to short, but all they'll need to do with gold, and it does get manipulated, is to pump it up, do that liquidity grab. Everyone who has their stops logically just here would be stops out before then it would before then dropping. So then anyone who tries to short here would be selling at the low, and obviously it was a bullish move, and so you had to kind of allow it to finish the move. And what I really like about the price action, taking everything away and putting everything to one side, is that when we have this move up like this, we have a bit of consolidation and we just think, is it just going to go up and then just curl back down again? Sometimes markets will do that, but when you're looking at higher time frames and bigger ranges, it's a bit like trying to move a big tanker as opposed to a small little speedboat. The directional change and the sentiment change can sometimes take a little bit longer than you would like for it to do. For it to take a little bit extra time, therefore meaning that you would have to be a little bit more patient. And I'm all for being patient, except for when I'm in the trade. When I'm in the trade, I just want to get in and get out, and I don't want to have to sit around for hours and hours and hours. And so, I tend to set alerts and just be really patient in terms of getting the best entry. And I know from experience that this would have not been the ideal place to short necessarily, unless we had a clearly defined move down, like some sort of a candle like this, where maybe on a 1 hour or 4 hour we get a sharp push. You can see these are 4-hour candles, and they were really beautiful. And so we just had to wait, and we did. And then what happened? It went up to the 76.4% fib, which, when you slice up your chart time frame using these key fibs, you have a 23.6 plus a 76.4 equals 100%. So you're carving it up really nicely, and that 764 is a real key fib level. Why? Because when it comes to Elliott wave and Elliott wave rules, you're looking for generally the whole move up or down, then a pullback, and then a retest. And it's on that retest that you're looking at a cue to perhaps getting in and perhaps seeing a sentiment change. So in this case, you would see a move up, and if we go to the bigger picture, the lower high would be made perfectly in this case, so precise. And so when you see this precision, you just know you want to be shorting and looking to short, repeat, short, repeat. You don't expect still with gold in particular for price just to drop in the straight line. If it does, wonderful. But you won't be too surprised to see if it wants to chop around that it would do so. But you have to remain convicted, the conviction knowing that this is going to indeed react off this level, and it is going to sell off, and you are going to be able to short here. So calling tops and bottoms by using my 764 strategy, it just helps you to really refine and get the best entry, because there were traders there that were talking about 50, 55, and all sorts of levels up here based on their ideas, using some obscure fib numbers, I don't know, like a 79, other levels, which they may work if they have a strategy for it and it's proven to work. When all is said and done, fantastic, that's all you need. But there's no point pushing those ideas if you haven't back tested them yourself, or more so, at the end of the day, you're not making consistent money, because at the end of the day, this game is just about repetition. And what you want to do is have something where you can just take it out of the box, so to speak, plug and play, without the worries or dramas of, is this right, am I doing this right? It's literally applying the same rules, same principles, and that's what my strategies are about. They're battle tested over years and years and years. You know, we're looking at best part of sort of 10 years where I've been doing this for myself. And you know, I've been trading since 2004, so it's been a long time doing what I'm doing, trying things, and now I can tell you that when I share something, I want to be sharing something of value that I feel you can indeed utilise. And you know, here's another fine example of the 76.4 of that last range coming into effect, and you know, you can see it stuttering and stalling. Then we get this little spike down with news, and then it reverses. So a little stab down, liquidity grab around this key level. So you wait, you be patient for it to test that seven. When it's so near to the 764, it would be rude not to allow it to test. It's going to suck in liquidity, buys, you know, straight away people are going to think automatic, buy it back up, buy, and it tests it once, twice, three, and then drops back, one last suck in. There's a lot of liquidity being grabbed here with all this consolidation, a lot of false starts to the upside. These are where all the impatient people get stopped out. Those that have no experience really and have no strategy, no game plan. It's just having a punt when all is said and done. And sometimes it might work because it might go up, but often if it does this, you're screwed. And this is why people lose, because they don't have something that they can try and test, try something that's tried and tested. I do, and I share it freely with you and everyone else. And I just hope, I'm hoping that by giving something to you, that you can actually take it and utilize it and monetize it when all is said and done. Again, people are independent and individuals, and so they'll be so busy with their own ideas, and it's sometimes not easy just to say, here, take this and use it because it's going to make you money. They'll be like, okay, I might take some of your ideas, but I've still got my own ideas and I want to do it my way. And that, you know, who am I to judge them and tell them? If it was just about no ego in this game, and we were just machines and robots, and I could just plug you in and turn you on and say, right, work the 764 strategy, a bit like those expert advisors and some form of algorithm. You know, no one's been able to apply this principle, my strategies as yet, to a robot as such, but it would be nice if one day they could. But anyway, I digress. Point is, I wanted to highlight the bigger picture because you see here, it's stabbed down finally, sucked in liquidity, tested 7.6, rejected, went up. Same ideas, therefore, moving forwards to this level, 1847, just shy of 1848. What we see is consolidate just before. I'm still not convinced to short here until we get something. Stabs up, liquidity grabs, now it's good to go. So similar idea, similar principle. Now, what are the rules for my 764 in terms of targets? Well, that's made pretty much simple for you as well, because the 764 strategy of any range will have a 38.2 correction. So in this case, because we've come up from the 1750s low, the 38.2 in this case sits at 1811.7, so just shy of 1812. So what's my target? Well, it's 1812 because we always round up, nice and conservative. And if at the end of the day price gets down there off this massive move, you're looking at a generous what's that, 300, about 300 plus pips, 300, nearly 400 pip move. It's pretty decent. So you can make money now. You know which direction to go. So every time it pops up, you short, pops and short. So just to show you quickly on the weekly, just wanted to highlight this. These white candles mean that the volume is very low. There's no commitment, and you can see that reflected over the last 4 or 5 weeks with gold, how it's been very range bound, consolidates, swings up, goes back down, swings up, goes back down. You know, you can see it here, goes up, swings back down, goes up, swings back down. Very range bound mixes, and so you can appreciate that here people would be assuming that it was just going to do this as well. I was hoping it would, but we've had a lot of uncertainty that came out from the news. Fundamentals were being dictated by potential war or something going on with the Russia and Ukraine conflict. So that's causing a bit of a stir, because people were saying, well, if there is going to be a war, what happens with things like gold as a commodity? People look to, well, people, but companies, hedge funds, they look to maybe buy some gold and hold it and hedge because it's supposed to be a safe, stable investment, and it's one of those safe havens in times of doubt and crises. But with everything that goes on in the world and all the manipulation, it doesn't necessarily just automatically work that way. So you would be wrong just to assume that it was going to go up. You want to see if it's going to go up first, but there are other factors at play, other variables. So there's things like, well, what's the economy doing in America? How are they doing? Are they going to raise interest rates? That is likely to happen. And is it going to happen on Wednesday? Because Wednesday we have FOMC. So, there's little things that you have to kind of look at, which are all part of the bigger picture. Devil's in the detail, as they say. Anyway, I digress. So just want to show the weekly. We've got a weekly trend line up here that sits at around 1860.64. Maybe, just maybe, if we get a little nudge down, we might get a bit of a kick down, and then it might just blast on up. It remains to be seen what happens this week. But just drilling down to the daily, I wanted to also drill down here and go in some detail. So just highlight what we got up to on these last few days. So Thursday, we finally went up on Thursday, and we went and tested that key fib, at which point I was starting to get involved in shorting and repeating, shorting and repeating. Now, if I just go to the daily very quickly, it was bullish, and it was sitting at the bullish price action. I needed for it to come off there and to close bearish, or to give us some kind of rejection. Which on my daily charts, I've got UK time zone, so midnight UK. This is how it closed. Small wick, doji candle. A lot of indecision. That's what we want to see, stuff like that. So this is our cue to short, and every time it popped up, retracement, short it, retrace, short it. Now we know not to be too worried about getting missing out. There's no fear of missing out with gold. Why? Because it's a mammoth commodity. You don't ever have to worry about missing out. If you want to catch a 300-400 pip move, unless it's just going to do a straight line sell off, you're not really going to miss out, and you can always find an entry. And so any pullback, we've just been shorting. So, drilling down to an hour, I don't usually trade on Friday, but I'm pretty much done for the month. So I was quite happy then to focus my efforts on, making videos like this and explaining a few things, and just being available to support. And anyone who has any questions, just to ask, feel free to ask me, and I'll share some of my knowledge, experience, and hopefully some of it rubs off on you, or maybe I could just answer some of your questions that will maybe provide some knowledge for you, some nuggets of info that you can use. So yeah, here we go. So part of the extended levels from the last range, where we clearly broke out from, the last highs were just sitting at 1830. Now if I show you that chart on, say, a 4 hour, that 1830 is a key area, because it proved to be a good sticking point. A lot of resistance there, and a lot of people were looking to short there, but I was saying, well, if it goes there, we want to see if it goes retest this area for, say, a fourth time, and it breaks, then it's going to just fly up and hit the 764, at which point I'm going to short it from here. That was the plan. That was a game plan. You could even look to go long for it, and at one point I did look to start buying it, to buy it up to the 764. But it sort of went up, and then it just stalled and became very sluggish. And I thought, well, I'm not just going to buy and sit and wait on this. I'd rather short it. I'll make some money going down, no problem. So it wasn't greedy, just timed it, and said on Friday, don't usually trade Fridays, but Friday with the setup, it was all good. We even had a head and shoulders, so left shoulder, the head, the right shoulder, and we had that first break of the neckline at around 1838. Now if you look at 1838 on a daily, that was the opening price at around 1838, and so breaking back below there was a cue, really. I wanted to see as a confluence to help us get short, and so we broke. And so I was saying to people, yeah, if you're not in already, thankfully people were in already from 38, 40, 42, 44, 46, 47. Really nice entries. Just hold, take it down with the divergence strategy that I have as well. Breakout of any resistance, so clearly 1830 being resistance. Therefore, that we're going to get divergence, and we're going to take it back to the previous structure. So divergence being on the 4 hour, I believe. Yeah, there's a ton of divergence there. What is divergence? Well, divergence is when we get a move that's just not sustainable. Why? Because there's just not enough volume. So in this case, not enough buying volume, and you can see that reflected in the price action. It was just sticking. It was just waiting patiently, grab some liquidity, go down, suck in some sellers, spike up, grab more liquidity until it tapped out. And what did it do at the 76.4? Taps it perfectly. And when it does that, considering the massive magnitude of this move, we're looking at almost 1,000 pips. For it to tap there as precise as it does, as it did, and then bounce off, I'm all over this to short it because it's conforming. That is precision. That's why we use fibs as a primary confluence. They are more accurate and more precise than anything else out there, than any ICT, smart money ideas, supply demand zones. All of that is fine. All the blocks, all fine. But in terms of precise and just want clean points of entry, not around about there, but when it does this on such a huge move, look at it, nearly 1,000 pips, and it didn't shoot past it, didn't stop short, it taps it, bounces off. That's perfection. And so when you see stuff like that, it gives you that confidence, which is a massive confluence in itself, to actually get in and make some money. You are going to monetize this information. And so for me to then say, I don't know, bet the house on it, for example, it instills me with that confidence that this becomes high probability setups. And so we waited and waited and waited, stalked the price, put alerts on, hits it, taps it, start shorting. Doesn't matter when we get in, short there, short there, short there, short, repeat, short, repeat. Now every time it popped down, shorted it. And when it dropped here, what we did was we looked to, on Friday, help a lot of traders make money on Friday. So you're welcome, those that got involved and said thanks, no problem at all, happy to help. Glad we all made some money from it. It was fun. I really enjoyed it. I was actually sat on the sofa for most of the day. I did go and do some cooking, cook some lovely lamb chops. Friday's my day off usually because nobody's in at home, everybody leaves, everyone's got their own thing to do, so I'm on my own. So I get my own day, just peaceful. Weekend's always busy, so forget that. But if you can take a day and a week off just to chill, it's great. So Friday, I sat on the sofa and I was trading off for my phone. And why was that easy to do? Because I wouldn't recommend trading off your phone. But I did it because it was easy, because I already knew the levels, already done the research, done the analysis, already know what I'm looking for. I just kept one eye on what was going on with the news. Go on Reuters, see what's going on with Bloomberg to talk about this Russia conflict, which was just a lot of talk at the moment, but no action. Unless they invade, then nothing's going to happen. If they invade, then gold's going to fly. I should imagine it would fly. It would be a bullish move, higher still. But in the meantime, we're just going to go with the technicals, head and shoulder, 764, fib extension is enough confluences to tell me that I need to be shorting every time it goes up. So what did we do? We plot what we call a 3-option rule. So you take the first move, so there's the first move down, and you want to chart it and monitor it, and every time it pops up you want to short it. Now what was interesting is the first option of my 3-option rule, and you can find these rules in my Discord. They're under price action specifically. There you'll find the breakdown information of Elliott wave theory, correlations, EMA's pivots, awesome oscillator which I use. This is the volume indicator that tells me if there's buyers or sellers in the market, more buyers than sellers, etc. So it's a good useful tool. It's not a lagging indicator. So yeah, anyway, digress. We tapped the 382, so I shorted at 35, started getting in there. Took a little bit off, scalping, because Friday's a good day, scalp day. We already had an extended level perfectly to the 161, so I knew that we were tapping out at a good level, and for it to then go up wouldn't be a surprise. Also previous structure, very clean, very clear. So far so good, you understand what's going on. Support, resistance, 101, it's all working beautifully. As seen on lower time frames like an hour, 4 hour, you can see it. Then what did it do? Proceeded to go up. So when it went up to the next fib, I was just putting orders on. I actually put sell limit orders on, so it would just trigger me in. So I could just sit on my sofa, watch some TV, relax, and just let it do its thing. And it filled me until we got to 43. When we got to 43, what did I do? I manually put some trades on and started executing extra position, extra risk. Why? Because that's my 764 strategy on this range, which is a smaller range to the bigger picture, but it's still a 764 strategy. You can apply it to any range. It has nothing to do with these time frames, because a lot of people say, well, which time frame would you execute it on? And I'd be like, well, it's nothing to do with the time frame. So just focus on the ranges, the high and the low, the high and the low. So here we have a 764 retracement, short it, short. Where back down to? Well, because it was late in the day, we were well into the US session, I shorted it back to my 764 of this range. So 764 up, then we plot some fresh fibs again, and 764 back down to this range. So I took a ton of shorts up and cashed out, scalped a few and cashed out, all done by about 1832. Why? Because my 764 was sitting at about 1832, so when it hit there, pretty much all done. And then it just proceeded to consolidate around that level for the next 3-4 hours before dipping down and retesting that low and bouncing. So where to next? Well, it's finished on a bullish note, so we'll see if it goes up. That's why I got out, because it did die off a little, and I thought, well, late on in the day, it's Friday, we're getting into the weekend, I don't want to hold shorts on gold over the weekend. No need. It's just not necessary. If you're holding because you're swinging it and you're looking for this bigger move down to here, very well. If you've got small accounts and you want to try and make some money on it, then yeah, of course, it makes you want to maybe hold something. But if I'm going to be doing like 300, 400, 500,000 pounds a point pip, I'm not going to be holding anything if I don't need to. And the idea of what I said earlier, I'm patient when it comes to waiting for these perfect setups, give me the best sniper entry. That's what it's about. But when I'm in the trade, I want to be in and out and done. I don't want to be lingering, if I can help it, if the markets can help me. So where to now? Well, hopefully all of that has made some sense to you. I am going to look at the range that we are currently in and exploring. The more immediate range gives me 1782 as a potential, come down, smash that 618 area, maybe bounce off there, and then ultimately 1775, 1776 would be a nice play. So get down here, some structure there. Look, you can see might bounce off that 1790 area, 1800. Toy around there. But then if it tears on down through, we should see a decent retracement back to 1776. But the setup is there, and it remains to be seen if indeed he wants to do it. But first and foremost, as with the 764 strategy, the 764 strategy almost guarantees that we will see a retracement of a 38.2 retracement of that range. So not just any range, picking them, it's this range, the move where it started from. So this was the entire range, 1877 down to 1753, huge range, and then we have this fantastic on-point retracement, 76.4%, and then it starts to react there. We've got some divergence on the 4-hour, which is good. Divergence is seen on the daily as well. Lack of volume, went up and stalled. So yeah, down further after a bit of messing about. Maybe break that 1830 area, and we can get down to 1812. After that, we will see. But hopefully, this gives you some insight into how I apply my divergence strategy in combination with my 764 strategy. Both high probability strategies, and they just helped, especially when they combine. I mean, when you level up like that, you layer on top a couple of very high probability strategies. I mean, it's just money making opportunity, and it's like when all the stars are aligned. So for me, it's like quick, where are the deeds for the house? Because I want to put your house on it, family house on it, and everyone else's house on it, and let's see if we can double or quits. It is that kind of feeling that you get, is a gut feeling that when something looks good, feels good, makes sense, stars are aligned as it were, and I've got strategies which I just stick by and work off. If the strategies give me a setup, I just take the trade almost on auto without thinking about it, because I know 8 times, 9 times out of 10 it's all going to work out, and that's how we play the game. So I'm just going to update my scorecard, and got to add to the scorecard that we've just got this one. So I don't normally trade on Friday, but we did, and I'm glad we did, because we absolutely smashed it. It was gold again. It was it was all about the 764 strategy on top of the 764 strategy. Timing was I'd say pretty decent overall. Entries were pretty decent overall. Risk was on point. Profit was amazing. The plan was on point. The mindset was brilliant, and waited again for setups, for the right setup and entry, and I don't know, smashed it, I suppose. What would I add to this? 10R, 20R, 5R. I mean, all that is great. You can tweak your journal to make it work for you. For me, I'm beyond all that. It's just not about the profit. We make money. It's just a case of how much we make, and it doesn't really matter really at this point. So when you get to the level, someone asked, and just to remind you, when you get to a level where you do not need to make a withdrawal from your trading account to live off, then you know you've arrived. You're at the level you need to be, where you can keep your money in an account and just compound it for a year, and then withdraw some money at the end of the year, or every 6 months or so, or every 3 months, every quarter, if you want to measure it that way. But there's no rush. It's not like you need that money. You're not reliant on it, and so that's the level you should be looking for. And so incorporate that within a 5-year plan, and see how you get on. And I'm quite happy to support you, or support anyone who's that serious and that focused and says, yes, I want to do that, and that's where I want to be with my trading. Then I will be fully supportive, because you have to have the desire to do that first. If you're not here or there and you're just wasting time and you're dithering a lot and you're up and down and trying that strategy, and you're just messing about with other ideas and you're trying to make money from, I don't know, from funding accounts, managing accounts, doing whatever the affiliations that there are out there, doing all that. It's all very well. It's cool, but is it going to be life changing? Are you going to be making the sort of life-changing amounts of money that's going to afford you a better lifestyle? Because all I see is people doing all of that, but they just sit trading. They feel compelled that they have to send out signal after signal after signal all day, every day, and it just it's draining. I must admit. So not give us a call or message me. Get in touch. Instagram, Telegram, Discord. Always answer messages. I've got 78 messages that I haven't answered as yet. I'm going to get onto them today. But yeah, wish you all the best. Hope this finds you well. And any questions, do ask. And enjoy the rest of your weekend.